Today, we're diving into some explosive Bitcoin news that could shake up the crypto market. We've got a $9.25 billion BTC options expiry, the US Bitcoin spot ETF data, and so much more. If you're ready to decode the future of Bitcoin price, hit that like button, subscribe if you're new, and let's get into it. First up, let's talk about the massive $9.25 billion Bitcoin option expiry happening this week. This is a huge deal. Options expiry can cause significant price swings, and both Bitcoin bulls and bears are positioning themselves for a win. So, who will come out on top? The Bitcoin halving hype has long passed, and this month's massive options expiry provides insight into the future of the current BTC bull market. A total of $9.25 billion in Bitcoin BTC options is set to expire on the morning of June 28th. June's monthly expiry is especially important given that it marks the end of the first half of 2024 and is historically the second largest expiry in every market, including the traditional finance industry. Investors are especially concerned after the $3 trillion tech giant Nvidia traded down 12% since its all-time high on June 20th. It has been 2 months since Bitcoin's halving, which likely explains why 57% of the bullish bets have been placed at $70,000 or higher. But in reality, the market displayed weakness in the past 2 weeks, making those call buy options essentially worthless. If Bitcoin remains near $61,500 on June 28th at 8 a.m. UTC, the rights to buy Bitcoin at $62,000 and $64,000 will not take part in the expiry. Similarly, put-sell options at $58,000 and $60,000 are rendered null. Bitcoin bulls have weak macroeconomic data on their side, which favors a more aggressive rate cut and monetary stimulus campaigns from the United States Federal Reserve and Department of Treasury. Sales of new US single-family homes dropped to a 6-month low in May, down 11.3% from the prior year. More concerningly, at the current sales pace, it would take 9.3 months to clear the new houses supply, up from 8.1 months in April. Currently, Deribit is the absolute market leader in the June BTC options, totaling $6.65 billion in open interest. CME, the vice leader, entices a $1.15 billion open interest, followed by OKX with $735 million and Binance at $520 million. On aggregate, the total call and put BTC options for June 28th stand at $9.25 billion, which is considerable, but at the same time inflated by excessive bullish call options. The 0.51 put-to-call ratio indicates an imbalance between the $4.4 billion call open interest and the $2.25 billion put options. Nevertheless, if Bitcoin's price stays below $65,000 at 8 a.m. UTC on June 28th, only $440 million worth of these call options will take part in the expiry. Bitcoin bulls need $64,000 to avoid losses. Between $57,000 and $60,000, there are 660 calls versus 14,850 puts. The net result favors the put-sell options by $820 million. Between $60,000 and $62,000, there are 3,910 calls versus 11,140 puts. The net result favors the puts-sell options by $430 million. Between $62,000 and $64,000, there are 5,220 calls versus 8,690 puts. The net result favors the puts, the sell options, by $215 million. Between $64,000 and $66,000, there are 6,880 calls versus 6,940 puts, and the outcome is approximately balanced between the call and the put options. This rough calculation assumes that call options are used primarily for bullish bets and put options are for neutral to bearish positions. However, this simplification does not account for more intricate investment strategies. In short, Bitcoin bulls desperately need to sustain the $60,000 support ahead of the June 28th expiry to avoid a potential $820 million scenario favoring the put options at Deribit. Now, let's address the recent warning signs. Bitcoin's price has dropped below the trader's cost basis, which is a red flag for a deeper sell-off. But what does this mean for the Bitcoin price prediction and the future of Bitcoin today? Bitcoin's price has experienced mounting sell-side pressure, causing it to shed more than 5.5% over the last 7 days, and setting a 6-week low at $58,400 on June 25th. During this sell-off, Bitcoin dropped below its short-term cost basis, risking a deeper correction. Since mid-June, the spot price has plunged below the cost basis of both the 1 week to 1 month holders at $68,500 and the 1 month to 3 month holders at $66,400. Bitcoin's short-term holder, the STH cost basis or realized price, is a metric that represents the average acquisition price of BTC for investors who are considered short-term holders, typically defined by the movement of coins that have been held for less than 155 days. Data revealed that BTC's breach of the $64,000 level on June 23rd saw it fall below the STH realized price at that time, which was $64,591. In addition, the latest drawdown was inches away from pulling the price below the cost basis of the 3 to 6 month holders at $57,300. Which remains on the rise, even though the price has continued to fall. The report also highlights that the cost basis of the 1 week to 1 month holder has plunged below the 1 month to 3 month cost basis, signaling a diminishing momentum on the demand side and a net capital outflow from the asset. On June 25th, the 10 United States-based spot exchange-traded funds, ETFs, saw minor inflows totaling $31 million and ended a 7-day streak of outflows. Data from 𝗖𝗢𝗪 revealed that on the 25th of June, Fidelity's ETF led net inflows with $49 million, followed by Bitwise Bitcoin ETF with $15 million in inflows, and the Van Eyck Bitcoin Trust ETF came in third with $4 million in inflows. On the other hand, the Grayscale ETF had a single day outflow of $30.2 million, while the ARK21 Shares Bitcoin ETF reported $6 million in net outflows. As of June 25th, the 10 spot Bitcoin funds that began trading on January 11th have seen net inflows of $14.42 billion, with more than $53.56 billion of assets under management. The massive outflows the spot ETFs witnessed over the last few weeks are the highest since April, when they posted total net outflows exceeding $1.2 billion between April 24th and the beginning of May. Let's now jump into the Bitcoin technical analysis, where I will share my short to medium term Bitcoin price predictions. Okay guys, let's spend some time now taking a look at the chart for Bitcoin, and I'll be sharing my short to medium term price predictions for BTC. Now, a few weeks ago, maybe even a couple of months ago, I was talking about how it was more than likely that we're going to be heading down towards our 200-day exponential moving average. That is the white line that you see coming through the chart here. A lot of people were in disbelief. They didn't believe that we would see such a big correction. We're only on the up, hence the number of people going long on the market and putting those calls on the market in the open interest and so forth. Lots of people were speculating on the idea that we're going to be pushing up to new all-time highs. The requirement to come down to the 200-day EMA isn't one that is necessarily something that we have to see, but it was something that I thought was going to happen due to the fact that we were aggressively moving to the upside. And typically after such a significant surge to the upside and a Bitcoin halving event, you normally do find profits being taken off the table. So moving down to the 200-day EMA is quite something that quite typical, and it's something that we see quite often. Now, with this move to the 200-day EMA, we can see that we need to hold this area as support. And for the most part, I think we're going to still be dancing around the 200 EMA for quite some time. I don't think we're going to find it as an immediate support lifeline just yet. But this is where I do think we're going to find a lot more demand coming in for BTC. Now, obviously, a moving average, an exponential moving average, is just that, a moving average. And what we mean by that is when I was talking about this moving average was more towards the kind of $52,000, $54,000. Now, obviously, this 200 EMA is sat at $58,000. And so this is actually obviously helping keep that price a little bit more buoyant and a little bit more to the upside. Now, obviously, we are lower than a 50-day EMA, that is the blue line that's coming through here, and lower than the 50-day simple moving average, the yellow line that's coming through the chart here. Now, this aggressive sell-off that we've seen here to the downside is a bit problematic, but I'm not terribly too concerned at this stage. Obviously, taking a look at all of the overlapping nature of everything that we have seen so far in terms of this ranging market since March 2024 through to where we are today, we haven't really done anything terribly too alarming. We've basically been trading between the low side and the high side. We haven't had a breakdown where we can see significant, downward pressure. That's going to happen if we do go down into a new local low, which would be way down here at the 56,552. So if we do lose that area, then of course we're going to be a little bit more concerned. There is of course the concern of a bigger three-wave correction. I've spoken about this a number of times already. I'll show you this on the chart right now. It's a giant kind of three-wave move where we'll be targeting out this kind of lower range at between 51,453 to 53,676. I'm just going to do some cross checks to make sure that that's still valid. It could still be a little bit higher than that, to be fair. It does sit a little bit higher now actually looking at it. So I will adjust for where we currently sit, which is actually in this little range here. So $62,046 to $55,394. Okay, that's going to be the range that we're kind of targeting. I'll remove this one to get rid of the confusion that's on the chart. Okay, a big three-wave correction like this, it could be a wick that comes down lower than the 200 EMA. I will be really concerned if we close lower than the 200 EMA on the daily time frame. But for the most part, I'm not expecting that. I would expect, a bit of volatility, maybe a wick down here, massive demand in this range, and then price to go back above the 200-day EMA. So from a three-wave correction, it's looking okay. I'm not actually terribly too concerned. Although this can look quite scary here with how steep this has come to the downside, specifically since June the 7th, we have seen a move by 18.88%. Again, I'm not too concerned about it. We're testing out the 200-day EMA, finding it as support at the moment. This is something I've been talking about for weeks. Again, isn't terribly too concerning in my opinion. If we do lose the 200 EMA, I expect it to be a short-term loss where we head down into the three-wave correction, finishing it off between 52 and 55k. Okay, it's possible that overextends, but we'll talk about that should that happen. For the most part, this is typically where you would see that third-wave correction finishing. You don't have to come down any deeper. Okay, this in itself is typical after a Bitcoin halving event and after a significant surge to the upside. Profits are usually taken after a BTC halving. We were talking about this months ago as well, specifically on the build up to a Bitcoin halving. A lot of people think that that's the catalyst for a big bull run, but historically the data tells us that we see a massive kind of sell-off event. It's like a sell the news event, because the Bitcoin halving event only really affects the ongoing mining efforts. It doesn't affect the here and the now, it affects the future. So it affects the future positively, but there's obviously the negative sell the news event and all the hype that kind of gets built up around it. Again, we see the same stuff, history repeating itself over and over and over again from a psychological point of view and how retail investors behave. The Bitcoin spot ETF obviously did do a few interesting things for us. We set a new all-time high for Bitcoin before the Bitcoin halving event, right? That's due to the ETFs. That's the first time in BTC history we'd ever seen that. So there are a few things that are different that we haven't seen previously. But for the most part, from a technical analysis standpoint, Bitcoin's not terrible. Taking a look at our stochastic RSIs, you can see here we are shifting momentum upwards a little bit. We've got plenty of momentum available to us on the daily, weekly timeframes and the macro timeframes, but I still think we're going to see more volatility before we see the demand coming in to actually take advantage of this situation that we find ourselves in. If we turn off the stochastics, bring on the relative strength index, you can see the RSI is nice and low as well, showing and indicating massive potential for a good run to the upside. There's no divergence outside of what was seen on the 5th of June, which if I bring that back up, you can see this is signaling a local high here with the bearish divergence on the RSI and price, and we've seen an 18.88% drop. Anyone who was able to kind of catch that could have capitalized in on a fantastic decline on the price by shorting the market with a great signal here on the divergence indicator. So all in all, not terrible. Okay, so although it can seem scary and a lot of people will be calling, a bear market now and all these kind of things, and how the crypto's a scam or it's done, it's just not working out. Ultimately, there's a lot of things that are going on in the macroeconomic climate that's causing a lot of fear. But I do think we are kind of getting very close, not there yet, but we're getting closer to a point where we're going to see max pain in the market. And the max pain is then going to be a huge opportunity for the more savvy investors who have been around the block a few times to take advantage of the fear that is in the market. I think we're getting close to it. We're not there yet, though. I do expect to see more volatility. We'll see a bit of a relief rally. Probably see then a Federal Reserve interest rate cut some point in the next few months. And as a result of that, we'll see a massive dump on the stock market and in the crypto market, and that's the opportunity to be buying. But again, we are finding support at the moment on this medium time frame of the 200-day EMA as expected and as predicted for the last several months. And yeah, we are just kind of working our way quite nicely through the TA here. Do expect more volatility, do expect a little bit more of a push to the downside in due course. We will be looking for bullish breakouts above the 50 SMA 50 EMAs, and we're looking for bearish breakdowns below the 200 EMA for trading purposes. And if we are to be using trading, leverage-based trading, I'm going to be trading on BitGet. It's my go-to platform. The link for that is in the description below. If you haven't yet got an account, go ahead and check them out. On a weekly time frame, things are incredibly bullish still, right? We can see here, if I zoom out of this, we are still targeting out some pretty decent levels for Bitcoin. We haven't reached its all-time high, in my opinion, for this cycle. We're just barely getting started. Where we are right now, I liken to where we were previously in this first correction. After a fantastic run to the upside in 2019, we hit a local high. We have a really big correction into December of 2019. That's kind of where I think we are right now. Fantastic run to the upside, Bitcoin halving event, and then, we come down into that correction before we get on take off into the next level. In the differences here, though, of course, we have that initial correction for Bitcoin in 2019 was before the Bitcoin halving event, and for us here, this is actually after the Bitcoin halving event. Obviously, in 2020, when we did have a BTC halving event, we do see a correction, more of a ranging market. We have a little bit more of a steeper correction as we had seen previously in previous BTC halvings. So for the most part, I'm not too concerned. We still have some pretty good targets, 100 to 120k BTC in the longer term, but do expect volatility as we have a big expiry coming, as we can see the 200 EMA being tested out right now, and we do have the idea of a 52 to 55,000 BTC three-wave correction finishing off, which on the weekly time frame would find support on the 50-week EMA. Guys, let me know what your thoughts are on all of this in the comments below. What are your price predictions? Let me know. If you found today's video useful, smash the like button. If you're new, subscribe, and if you haven't done so yet, check this video out and stay well informed with the other crypto projects in the space.